50-year mortgage loan? Are we crazy? Is everybody okay? And if you sign up for it, you are a dummy. I don't care. I don't care. I don't care. You are dumb.
I'm going to make a fortune off of this, which is great for me.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius. And if you're new
here,
serious?
Then to add a 50-year mortgage on top of that, to only take off like what, $100, $200 from your mortgage? That's
a 50-year mortgage, you're going to pay $10 million for a $500,000 house.
Now, many people already feel like a 30-year mortgage is a complete scam. But what if I told you that the idea of a 50-year mortgage was being entertained? Well, look no further. It is, and I have the proof. And this is why some people are saying a 50-year mortgage might be the biggest scam that they've ever seen. According to this CNBC article, it states, in an attempt to make home buying more affordable, President Donald Trump floated the idea of a 50-year mortgage in a social media post.
Are you serious?
And yes, it actually was a Truth Social post, and it says here, 30-year mortgage with President Roosevelt's picture, and then it says 50-year mortgage, President Trump. And according to this CNBC Business article, housing experts warn that President Donald Trump's plan for a 50-year mortgage could raise the cost of homeownership by stretching out payments, adding more interest over time, and driving up home prices. Now, I'm no expert, but that sounds like the complete opposite of what is trying to be done, doesn't it? And I understand that the idea of the 50-year mortgage is to give people hope, and it's being sold as a way to make homes affordable again, but the experts are waving the red flag. Now, using the median home price of $415,000 and an interest rate of about 6.3%, CNBC calculated that a 50-year mortgage would drop your payments by around $233 per month, but you'd pay about 40% more in interest. And I said to myself, those numbers sound a little crazy. Let me keep doing some more research. And then I looked in this CNN Business article and it said this. They said take a $450,000 home. With the 30-year loan, you would pay $547,000 in interest. That's just for 30 years. But look at the comparison here. With a 50-year loan at the same rate, you're not paying that measly $547,000. You will be paying about $1.02 million in interest. That is 87% more than on the 30-year loan. And if y'all got money to waste like that, let me know, because I want some. So yeah, while your monthly payment may look cheaper, over time, you're handing the bank hundreds of thousands of dollars. That's like buying a $40,000 car and paying $75,000 for it because the monthly payment fits your budget. So is that a discount or giving you a longer leash? And what worries me is that the amount of people who might entertain this, they might be like, oh, I'm going to have lower monthly payments. I can finally afford to buy a home. And they all rush out at the same time to go buy a house with a 50-year mortgage. But when everybody floods in at once, what happens, class? You're right, prices rise. When have we seen this before? I don't know, maybe during the you-know-what? When people were overbidding for homes, when the interest rates were low and people were having bidding wars. Some of these people were offering like $20,000 over asking price with no inspection, by the way. And my guess is this can get very dangerous. And we could see the same exact thing happen with a 50-year loan. So sure, it may be more affordable monthly, but when you're competing against 10 people who can now afford the same thing as you with a 50-year loan, the solution for the house you wanted could possibly turn into yet another affordability crisis. And I know what a lot of y'all are thinking. Simone, if I at least get my foot in the door and I own a house and I get the mortgage, I can at least start building equity, right? But here's something you may not have considered. According to CNBC, homeowners would not be able to build equity as quickly because their principal payments would be smaller. The amount of interest paid to lenders would be 40% higher. And according to Richard Green, a professor of finance and business economics at the University of Southern California's Marshall School of Business, he states that with a 50-year loan, it could take like 30 or 40 years before you've even paid half of your mortgage principal. And let's be honest, y'all, a lot of people get homes because they want to tap into the equity. Many people use that to buy another house, whether they live in it or they invest into another property. So with the 50-year loan, you would be paying a bunch of interest for decades before you can even tap into the equity, leaving many people saying, what is the point? Because you haven't even made a dent in the principal. And as we've talked about in other videos, when you have a home mortgage, the beginning stages of the mortgage, you are paying interest. Very rarely do you see a dent in your mortgage in the first like 2, 3, 4, 5 years. So if you think about it, it's kind of like renting from the bank, except you're responsible for the repairs, the taxes, the insurance, and everything else. And this raises another question that not many people are talking about. What happens if you give up the ghost before the loan is paid? What if you have children, right? What if your kids don't want to or can't take over that loan? That would mean that the home would go back to the bank, aka the lender. And I'm not trying to be a conspiracy theorist, but wouldn't that mean over time, more and more homes would end up in the hands of the banks, the corporations, the wealthy investors, the same elites that many people are saying are buying up all the properties now? I don't know. But at least with 30-year mortgages, people aim to pay them off early, most of the time planning to own them outright and pass it on to their children. But with the 50-year mortgage, that might not even be realistic. Homes might not stay in families, as if we don't already have a problem with that, but they might get recycled back into the system for profit. And according to Matthew Graham, the chief operating officer at Mortgage News Daily, interest rates would also be quite a bit higher than 30-year loans. A double whammy for those with any hopes of building equity. So you mean to tell me not only does the loan last longer, but it actually comes with a higher interest rate possibly because it's riskier for the banks? You don't say. But let's just think about this objectively. Who wants to be tied to somebody for 50 years, half a century? You know what? Some of these lenders might actually want to. But just really think about it. How many economic downturns can happen in a 50-year time span? How many job losses can one person have in 50 years? We didn't even talk about divorce or anything like that because we know that gets ugly when it comes to mortgages. So to protect themselves, they gotta charge you more because you might actually now be more liability to them. So that means you're paying longer at a higher interest rate. And this is given to us as a solution. But to me, this sounds like a dream come true for the banks, for the lenders. They really sound like the ones that will be winning. And trust me, I believe that the lenders and the banks will be booked and busy if 50-year mortgages go into effect. And I truly believe that this sort of product benefits them way more than it benefits you. Now, CNN Business says the best way to improve housing affordability is to build more homes where people want to live. A cheaper home loan might boost demand, but without adding new supply, it could actually push higher prices, which is exactly what I was saying earlier. Because we've seen this happen during the you-know-what. And I'm just somebody here with an opinion, but according to this CNBC article, a senior economist at Realtor.com stated this: "This is not the best way to solve housing affordability." And again, I'm no expert, but I sure know how to read something. And the experts on CNN and CNBC said the same thing. Longer loans likely aren't going to fix the affordability crisis. We might need some more houses. And when you make it easier to borrow money without adding new houses, all you're doing is increasing the demand. More buyers, same demand, prices go up. So I don't really think that this solves the problem that we have here. It just stretches it out another 20 more years. And did you guys know that there was an act passed after the 2008 housing crisis stating that loan terms could not exceed 30 years? So while what President Trump is proposing isn't impossible, this article states that you would need a lot of legislation to bring this about. And I thought that was a very interesting point to bring up because a lot of people have been having discourse about this on social media, but never say never. And though it's currently not something that is available, if people were able to utilize this 50-year loan, do you know that some of the first-time home buyers would be paying into their home loans well within their 90-year-old age? 90 years old, y'all. That kind of breaks my heart because if you look here, this CNN article states, last year, the average age of first-time home buyers in America climbed to a record high of 40 years old. So 40 plus 50 would make you 90 if you used a 50-year loan. And honestly, many people give up the ghost before 90. Just imagine retiring and still sending in mortgage payments every month. You know how many people are probably on a fixed income by then? You worked your whole life and still don't fully own your home. And you still gotta pay taxes and insurance? Oh my gosh, is this the American dream or the American debt plan? Cause it's a lot, but I do wanna be objective because I think many people would see this as a fair argument. The CNN Business article says, while homeowners would build equity more slowly than with a shorter loan, in some cases, a 50-year mortgage could still be better than renting and never accumulating any home equity at all. So I think an important thing to consider is, would you rather have your foot in the door or a lifetime payment plan? So let's see what the mean streets of TikTok think about this 50-year mortgage proposal.
I don't know about you and your house, but as for me and mine, we would never, ever, ever sign a 50-year mortgage on 50 years. I'm not signing anything for 50 years. Anything. 50-year mortgage loan? Are we crazy? Is everybody okay? No, nobody is okay. What are we doing? 50 years is... And if you sign up for it, you are a dummy. I don't care. I don't care. I don't care. You are dumb. 50 years. Okay. Just real quick before you come in my comments talking about, oh, that makes sense for me because blah, 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 blah. Listen to this. $350,000, the average interest rate is about 6% right now.
Yeah.
$350,000 or a 50-year loan, you're going to be paying $1 million, over $1 million on the home.
We just proved that earlier. Where's the lie? Some might say this is a tough crowd here.
Does that make, in interest alone, you'll be paying $800,000. Does that make sense to you? You won't even have 10 to 20% of ownership on your home for the first 15 to 20 years because all you would have been paying for those first few years is interest.
Yes.
You're not gonna see no equity in your home. Like, I can't believe, I'm screwed. Bye. Don't sign up for no, it's a lot happening, bro. I'm confused. I'm confused about this. I don't know about you and your house, but as for me and mine.
And somebody here is saying a 30-year is already going too far. So y'all ain't feeling the 30-year mortgage either. Somebody here said, I'd rather pay rent than to pay a mortgage for 50 years. Honestly, at that point, at least you can get a change of scenery. I'm just looking on the bright side. And somebody here is saying, now they're talking about 15-year auto loans. Cars don't even last 15 years anymore. 15 years for an auto loan is ridiculous. And now that she put it like that, some of these houses might not last 50 years. The way that they're being built now, they're not built how they used to be. So what if you can't afford the upkeep and the repairs and the maintenance and all of that? And we didn't even talk about property taxes, HOA fees, rising insurance costs. Oh my gosh.
That's their solution to the home affordability crisis. I want to be crystal clear about something.
Oh.
I am a mortgage loan originator.
Oh, he gonna get paid if this goes into effect. And I'm just being honest. The reason why they would get paid is because people would see a glimpse of hope. They're looking at what they can afford monthly, and they're gonna run to somebody like him and be like, oh yeah, I can afford, what, $1,200 a month? Sign me up for the 50-year mortgage. They're not gonna think twice about it. And there's gonna be so many people running to do it. People like him are gonna get paid. They get paid to originate loans for the home buying process. Each of them homes that they originate is a paycheck for them.
Mortgage broker, however you want to call it, mortgage banker, whatever colloquially, there's a difference between those things, but for all y'all watching this, it doesn't matter. Whatever term you've heard, I'm that guy. I'm gonna make a fortune off of this, which is great for me because over the last few years, when it's been terrible for everyone trying to buy a home,
right?
It's been awful for me because it's commission only.
I'm so glad he's saying this. Thank you. Thank you, sir. I have been avenged.
So once again, crystal clear. I'm gonna do well because this is happening, and I don't think this should happen. This is insane.
Yeah.
Their solution to the home affordability crisis, as opposed to finding a way to stymie meteoric rise of home prices or to cap interest rates on companies like mine, face it, instead of doing those things, they're like, oh, well, let's just have all the kids take out more debt over a longer period of time.
Yeah.
A 30-year mortgage was already kind of laughable. Like, every time I write one, I talk to the people like 30 years, you know, they're like, man, you're not going to be in this mortgage for 30 years. You're going to refinance, you're going to sell, you're going to do a bunch of things. But like 50 actually implies the impossibility of ever actually owning your home. And don't even get me started that if you ever reach that milestone of paying off your home and owning your home, the property taxes are still there and they keep going up and up until one day when you reach that milestone, your elder still gets booted out onto the street because you don't own. This government and these corporations that own this government have got to be reined in. It's insane. People, do you not see?
I see it.
Fine, I'll just make the money if nobody else is going to do anything.
Honestly, he has great points. And then just think about it like this. What if you get a 50-year mortgage and then your mom had a 50-year mortgage, but she didn't pay off her loan, and now you got a 50-year mortgage? Are you gonna then keep paying your 50-year mortgage and her 50-year mortgage if she ain't here no more? No. Then who is getting the house? Think about it, y'all. It's not staying in your family. And then you have a child who gets a 50-year mortgage, and you got a 50-year mortgage. You didn't pay off your 50-year mortgage because you got your house when you was 40. You know, the average age where people are getting homes now. So your stuff ain't paid off. Is your child going to get your house? Can they afford to pick up your mortgage? And hopefully they don't get themselves into a mortgage, because that is the problem why a lot of people don't keep the houses that were in the family and pass it down. They over there trying to build their own life, and there's nothing wrong with that. But it keeps everybody on this hamster wheel trying to own something, and nobody ends up owning nothing. Because the farther you stretch it out, the worse it's gonna be. 50 years? 30 was already like, if you paid off a 30-year mortgage, people was giving you a pat on the back, because a lot of people aren't doing that. People get bored. They want to travel. They want to see the world. Maybe the city just ain't what it used to be. Maybe they want to downsize. It's a whole lot of reasons why people don't stay in a home that they thought was going to be their forever home. People pack up and leave all the time. So you mean to tell me 50 years? In 50 years, you going to stay in one spot? Likely no. And I'm not saying there's anything wrong with owning a home. I think people really just need to consider the implications of a 50-year mortgage and what that means for your household and any relatives that you leave behind if you want to pass on property, if you want them to own your real estate or inherit your real estate. Not just that, think about the leash that you're going to be on if you entertain a 50-year mortgage. People like him aren't gonna be tripping. They're gonna make a lot of money. And I just know they're gonna make a lot of money because people aren't gonna think about these things before they do it.
Financial advice: if you can't afford a 30-year mortgage, you shouldn't be buying a house. If you can't afford a 48-month or a 60-month car loan, then you shouldn't be buying a car. Please do not get a 50-year mortgage. And also, please do not get a 15-year car loan. Your car ain't gonna last you 15 years.
I need to look into this because that's crazy. 15 years. Let me stay on topic.
I thought it was astronomical when I heard the car loans were going up to like 60 months, 72 months. Like that's a stretch. If you need 72 months to pay for a car, you need to look at a lower level car. I'm sorry, not everybody needs to be buying a Benz, an Audi, a Range Rover, and some people just aren't meant to be homeowners. I'm really sorry. Okay, there's reasons that rentals exist. Maybe rent until you can afford a 30-year mortgage, but don't buy a 50. You might not be alive in 50 years. That's it. I'm blown away. Oh my God, financial illiteracy. Don't do that.
And on the topic of the home loans, this isn't financial advice, but I definitely think people need to do their research, because this is not a game. If that does go into effect, we will see major shifts in the housing market. And my fear is that a lot of people would be in too deep and wouldn't even realize what they did until they're suffering the consequences of their actions. And I don't want to see that for anybody. That's why we're talking about it now.
Is a 50-year mortgage a good idea? I took some notes down so we can compare a 30-year mortgage to a 50-year mortgage. If we had a 30-year loan on a $400,000 house at today's rates, you'd have a $2,660 monthly payment. If you were to get a 50-year loan on that $400,000 home at today's rates, your payment would drop to $2,380, saving you $280 a month. Principal per payment. This is saying how much of your mortgage payment is actually going toward paying off the loan. On a 30-year loan for that $400,000 house, you'd be paying off $327 per payment. With a 50-year mortgage, though, you'd only be paying off $47 per payment. Total interest by the end of the loan. At the end of the 30-year loan, you will have paid $957,600, $557K of that being interest. On the 50-year loan for the same exact house, you would end that 50-year period paying $1.713 million, $1.3 million of it being interest. And last stat, if you were to own that home for 10 years with a 30-year mortgage, that $400K home, you now own $56,000 of it. You have $56K in equity. But after 10 years of the 40-year mortgage, you'll only own $14,000 worth of the home. You won't be able to refi, you'll hardly be able to sell, and by the end of it, you will have given the bank 3 to 4 times the amount of your mortgage. A 50-year mortgage is an awful idea.
I mean, I'm glad that he put all the numbers up for all the visual people out there. And if people don't see the impact after that, I don't know what to say. It's right in front of you. Most people have never seen this much amount of money in their life. We're talking penitentiary numbers on the screen for a mortgage, by the way. The 30-year mortgage already is giving penitentiary numbers, but the 50? Oh my gosh.
Everyone's freaking out about the 50-year mortgage that just dropped, but I think it's pretty genius. And if you're new here, I'm Peony the lender. I've been a lender for 10 years. I help people every single day from this app buy, sell, and refinance. Let's get into this because I have such an interesting take on this that most loan officers do not share. And I'll start by saying that they don't share the same idea because they're loan officers, not loan advisors like I am. Okay. Everyone keeps talking about the amount of interest that you're about to pay over 50 years. And I will say it is pretty crazy. I saw an example for a $400,000 house that it was like 1.7 million in interest or something crazy.
Yeah, and that was probably the guy we just watched.
Crazy if you kept that loan for 50 years. But what most people are missing is that the average homeowner in America only lives in their home for 11 years. And that is to say they live there, but they're likely going to refinance the terms of that mortgage. Like the likelihood of you having a mortgage that you get today for 30 years is very low, even if you live in that home for 30 years. And that's because you're going to do a cash out refinance, the rates are gonna come down, so you're gonna refinance. And every time you refinance, like right now, I'm taking people from a 30-year term to like a 20 or 15-year term. So the idea behind a 50-year mortgage isn't because we want you to be in this house for 50 years. I think that's actually insane that people are even in the same loan terms for even 30 years. The idea is that it gives you breathing room to qualify for a house. And that's the problem that we're facing right now. People cannot qualify. Yes, the savings is like maybe $200 difference from a 50-year to a 30-year, but that $200 difference actually makes a difference when it comes to qualifying for a mortgage. I just ran this example with one of my clients. They're trying to buy a $700,000 house. And if their interest rate was, let's just say worst case, 7%, they're gonna be paying like $4,800 for that $700,000 house at a 30-year term. If they got a 50-year mortgage, then they're paying $4,000. But here's the kicker. Their initial budget was like $5,000. So they can still do a $5,000 payment and pay less than 30 years of that entire mortgage. And this is only because this is their dream home. So they're gonna be living there for probably actually 30 years.
And no, they're not. See, now all of a sudden that 11 years that she was just talking about just went out the window. No, it applies to them too. It applies to the people who say, I'm gonna live in this house for the rest of my life. They do the same thing as everybody else. They live there on average those 11 years that you're talking about. They ready to pack up and leave because they want to move to another city, another state. They want somebody need to take care of their grandma or their mom or something like that. Divorces, job loss. Can we be honest?
But if you're not going to be living in that house for 20, 25, 30, 40, 50 years, then the amount of interest that you pay in the overall amount is kind of null and void. Especially when you're working with an advisor like me. I tell my clients, if you make $100 more to the monthly payment, you shave off like 4 to 7 years of that entire loan term. And of course, you're saving a ton of money in interest by doing that because now you're not paying the interest on the full term. So honestly, this is just like another tool in the toolbox for a strategy that you can use so that more people can just get into a house and then they can figure out that monthly payment later. If you're looking to work with a loan advisor, I am accepting new clients for the coming year. So
Look, I'm not trying to knock nobody hustle because I know everybody's trying to get paid. But anybody saying that this makes sense to me after seeing the numbers, clearly you just about a bag. It can't be about anything other than a bag. I would ask, are you going to get a 50-year mortgage? And if the answer is no, with all of your expertise, don't talk to me about getting no 50-year loan if you ain't gonna do it first. You first. How about that? You first. I bet you they ain't lining up to get no 50-year mortgage. And she was saying that it's about people qualifying. Here's my take. If you don't meet the qualifications, you probably trying to get too much house. Because if you don't qualify or you're cutting it close, you're about to be cutting it close when it comes to things like escrow shortages, property taxes going up every year, your insurance going up every year, and you haven't even factored that in. But are they talking to y'all about this when you're looking for a home? Probably not. They're like, well, you qualify on paper. They're not talking about the fact that you live in an HOA. The fees are increasing year after year. They're not talking about the fact that you qualify right now because you have 2 incomes in the house, which is why you are able to afford that house. But if one of those incomes goes away, you are at risk of your house being in foreclosure. Where are those conversations when we're talking about the qualification process? I'm going to tell you where they are. They're not happening. You want to know why they're not happening? Because we're talking about real life, and these scenarios, if they happen, would automatically disqualify you on paper. So as long as you meet the qualifications in real time, that's all a lot of them care about. And I'm gonna be totally honest with you. Once that loan is secured and y'all finalize everything from the house, you're not going to hear from your loan originator ever again. Your home loan is probably going to be sold over to a bigger corporation, and all that talk you was doing with somebody about, oh, like, I'm gonna take care of you, make sure everything is good. We gonna make sure you get the best rate as possible. We're gonna make sure that you qualify, and they're checking all your bank statements and stuff. All of that is over once you've bought the house. And I'm sorry, y'all, we just can't normalize everything. I know a lot of y'all are like, ain't nothing wrong with that. Look at the numbers. Men lie, women lie, numbers don't lie. Don't be fooled, y'all.
If any one of my clients came to me and said that they're gonna use the 50-year mortgage, I'm not putting my name on that and I'm walking away from you. You might as well just throw your money away in that situation. The 10-year difference on that and just interest alone and equity wouldn't add up. Any person that has basic knowledge knows doesn't add up to any person in the world with common sense. The same amount of time in 10 years that you get a property on a 50-year mortgage versus a 30-year, you're looking at a difference of, having $15,000 versus 40. Like, it's ridiculous. Like, this problem that we have here is a lot deeper than the lending. Only people that are smiling and happy at this, that if people bite on it, are the banks. Because they're going to make a ridiculous amount of money on people that are not going to have the people in their corner or hired for them to tell them that this is not a good idea.
And if you have somebody like that last lady, get them up out of there. Don't trust them.
There's nothing about this is good. Nothing about that makes any sense. Nobody can sit there and have a logical conversation with me and say that makes sense in any way, shape, or form. There's no property on this continent that is worth that. 50-year mortgage? No. And it's just like, it just gets worse. Like, people just add to the flame of just stuff that we just bring up instead of actually addressing the issues that are plaguing this economy and this market. We know that the reason why they're bringing this stuff up is just for them to make more money. They know that people have caught on to the idea that they don't want you to own anything. They already understand that. So now they're transitioning to basically predatory lending tactics again to get people to basically willingly give up their freedoms of potentially owning something. Because, it's bad alone that you have to pay off something and then still pay taxes on it. But then to add a 50-year mortgage on top of that, to only take off $100, $200 from your mortgage, that's... Come on, people. Shut that down right away.
And some people gonna buy it for $200 off. Now you got a 50-year mortgage. Yeah, you got $200 less than what you would have paid if you got a 30-year mortgage. Okay, cool. Now you got to pay 20 years more, and you still got increases on all these other things in your life. You gonna cough up that $200 anyway. And this comment here says, pay off the house sooner. Now, I knew a lot of people were going to say something like this. In a perfect world, yes, pay off your mortgage early. Then you don't have to pay interest to the banks. However, the people that are signing up for the 50-year mortgage, in my opinion, if it does go into effect, I don't think those would be people that are open and looking to pay off their mortgage early. I think these are people that want to lock in a certain monthly payment that they have to pay, but they're not considering the fact that property taxes and homeowners insurance, along with their mortgage payment, wouldn't keep their monthly payment what they think it would be. A lot of people think pay the bank the same amount year after year, and you don't. It fluctuates because of property taxes, which we all have to pay every year. Their home insurance went up. And these are a lot of things people don't even know happen until they become a homeowner. Then they're like, oh my gosh, I thought I was going to be paying X amount of money every month to the bank. And then you find out, nope, you had an escrow shortage. So yeah, you might have been paying $850 at one point in time. Now your monthly payments are $1,200, and every year it keeps seeming to go up and up.
You talk about making a 50-year mortgage. Is that only for personal loans or is it for investors too? Because if it's for investors, there's a world of possibilities that just like went crazy. If it's for investors, y'all have to understand, investors never want to pay their house off like a lot of people, regular people just want to own their house and just like be done with it, right? And so a lot of people are thinking to themselves, oh, a 50-year mortgage, you're going to pay $10 million for a $500,000 house. But a lot of investors, like, they just focus on the numbers. So long as the numbers make sense, the numbers make sense. So if you have a 50-year mortgage and everything works out, let's just say hypothetically in this perfect scenario, and your mortgage is $1,000 at whatever interest rate, whenever, right? And they're constantly cash flowing whatever the amount they want to cash flow. They don't care about the 50-year mortgage. They don't care about the 50-year. They couldn't care less about it. So long as the numbers make sense. Now the equity play will be like out of reach. Essentially, you buy a $500,000 house and it doubles in value. Now it's worth $1 million. You got $500,000 of equity in it. It doesn't really matter how long the loan. Somebody smarter than me is about to whoop me at that. Anyway, imagine the cash out refinance, right? It wouldn't add anything to the loan. Stretched out over 50. That's so crazy. You're talking about.
You know what? I didn't even consider the investors. That's an interesting take. I was actually thinking and considering people doing this personally, but as a business, it does make me wonder. But I can say this with confidence. I definitely don't think it's a good idea personally. But I need to know what y'all think about all this down below. Is a 50-year mortgage something that you would even entertain, or do you think this is ridiculous? Do you think it's a big scam, the biggest scam you've ever seen? And again, this isn't in effect yet, but we never know. In the near future, it very well could be. But we got to start making better decisions today in order to have a better future.